Jasmy trades at just over 1 cent, with a market cap of about $610 million, ranking 96th globally. Those numbers might sound, well, kinda unimpressive until you really dig into what's going on underneath. This isn't just some DeFi fork or a meme coin chasing hype. Jasmy actually launched way back in 2016, which, in crypto terms, is practically ancient history, and it was founded by former Sony executives Kazumasa Sato and Kunitake Ando. Let that sink in for a second. Sony executives. We're talking about the folks behind the Walkman, PlayStation, and honestly, the company that basically defined consumer electronics for decades. These aren't anonymous devs or serial entrepreneurs jumping from one project to the next. They built Jasmy to solve a pretty specific problem: personal data ownership in an IoT-saturated world. The platform combines blockchain with Internet of Things devices using 3 core technologies: IPFS for decentralized storage, secure knowledge communicator for safely transmitting data, and personal data locker for giving individuals control over their own info. And, this isn't just vaporware. It's actual, functioning infrastructure that companies like Panasonic and VAIO are already using. Jasmy runs as an ERC20 token with a fixed supply of 50 billion, and 99% of that is already circulating. That last part is honestly more important than most people realize. There's no secret stash of tokens waiting to crash the price. What you see is what exists. Jasmy hit an all-time high of nearly $5 back in February 2021 during peak alt season euphoria. Then, it dropped all the way down to just a fraction of a cent, about 0.002747, in December 2022 when the market totally imploded. That's a 99.9% drawdown. It's brutal, but honestly, that's pretty typical for altcoins during bear markets. The current price, around 1.2 cents, is a recovery from those lows, but it's still down about 99.75% from the all-time high. So this sets up a really interesting situation. Either Jasmy is fundamentally broken and heading towards zero, or it's actually massively undervalued compared to what it's building. The second half of 2025 should really show us which story is true. Hold up real quick. If this context is reshaping how you view Jasmy beyond just price charts and speculation, show some appreciation with that like button. And if you're serious about understanding infrastructure projects before they break out, subscribe to TJ Crypto World right now. We're separating signal from noise while everyone else drowns in hype. Alright, let's talk about the validator expansion that changes everything. Jasmy plans to expand its validator network from 7,000 nodes to 20,000 by the end of 2025. On the surface, that sounds like technical minutia, but validator expansion reveals 2 critical insights about where a project is heading. First, it signals confidence in future transaction volume. You don't triple your validator network unless you're anticipating significantly higher activity that requires additional infrastructure. Second, it demonstrates network decentralization improving in real time. More validators means no single entity can control or manipulate the network. Here's the connection most analysts miss. Validator networks require staking mechanisms to function properly. Validators need to lock up Jasmy tokens as collateral to participate. If 20,000 validators each stake even modest amounts, you're looking at substantial supply reduction from the circulating pool. Jasmy's staking features, rolled out through recent ecosystem updates, allow holders to earn rewards by locking tokens. With 99% of the 50 billion supply already circulating, any meaningful staking participation directly impacts available supply. Lower liquid supply meeting steady or increasing demand creates upward price pressure. Basic economics. The upcoming JANCTION platform ties directly into this validator expansion. JANCTION features a decentralized exchange and enhanced staking infrastructure designed to incentivize long-term holding over speculative trading. A decentralized exchange launch on Jasmy's native infrastructure means traders can swap tokens without centralized exchange dependency. This typically increases token utility and trading volume, both positive catalysts. Combined with staking rewards, JANCTION could transform Jasmy from a passive hold into an active yield-generating asset. Projects talk endlessly about decentralization, but validator count is where rhetoric meets reality. Jasmy moving from 7,000 to 20,000 nodes puts it in rarefied territory for IoT-focused blockchains. This level of infrastructure investment signals serious commitment to long-term viability over short-term token pumps. Developers and institutional partners evaluate validator networks when assessing blockchain reliability. A robust, decentralized network attracts serious builders. More developers Building on Jasmy infrastructure increases ecosystem value, which eventually flows back to token price. Partnerships get thrown around carelessly in crypto. We're partnering with usually means someone sent an email that got a polite response. Jasmy's partnerships with Panasonic and VAIO represent actual integrations where these companies use Jasmy's data management infrastructure. Panasonic isn't experimenting with blockchain for marketing purposes. They're implementing Jasmy's technology in IoT devices for secure data handling. VAIO similarly integrates Jasmy for personal data management solutions. These aren't press release partnerships, they're working commercial relationships. Japan's regulatory approach to cryptocurrency is, well, notoriously strict. They've shut down exchanges, delisted tokens, and enforced compliance standards that honestly make Western regulations look pretty lenient. In this environment, Jasmy achieving legal recognition as Japan's Bitcoin carries significant weight. This designation provides regulatory clarity that most projects never achieve. Institutional adoption requires legal certainty, and Jasmy has it in one of the world's most advanced economies. That's a competitive moat that can't be replicated through marketing or token burns. Recent reports indicate Jasmy is pursuing partnerships with local government entities and sports organizations, integrating blockchain-based data management into public services or fan engagement platforms could, expose millions of Japanese citizens to Jasmy infrastructure without them even realizing it. This kind of resembles how QR code payments became ubiquitous in Asia, not because of crypto enthusiasm, but through practical utility embedded in everyday transactions. If Jasmy achieves similar integration, token demand just follows naturally. Transcosmos, a major business process outsourcing company, partnered with Jasmy to explore data management solutions for enterprise clients. This represents potential adoption at scale, where Jasmy infrastructure could handle sensitive business data for multiple corporations simultaneously. Enterprise adoption moves slowly, but it really sticks once implemented. Companies just don't frequently switch core infrastructure providers. Landing enterprise clients creates recurring demand that stabilizes token economics, independent of retail speculation. Before we wrap with my honest assessment, I need to see that engagement. If this deep dive into validators, partnerships, and real-world adoption is giving you perspective others don't have, hit that like button right now. And for those who want analysis focused on fundamentals instead of moon boy predictions, subscribe to TJ Crypto World. Alright, here's my take on whether Jasmy delivers or disappoints. Let's be direct. Jasmy moving from just over 1 cent to more meaningful valuations really requires several factors lining up at the same time. The JANCTION DEX launch, for example, needs to attract actual trading volume, not just a bunch of speculative interest. Right at launch, staking participation. That needs to be substantial enough to actually reduce the circulating supply in a meaningful way. Plus, the validator network expansion has to finish on schedule and, attract quality node operators. Partnerships can't just be press releases. They have to translate into real, measurable transaction volume on Jasmy's infrastructure. And critically, the broader crypto market needs to cooperate. Even the best fundamentals, honestly, struggle against bearish macro conditions. If JANCTION succeeds, validator expansion wraps up, and partnerships really start driving adoption, Jasmy could, recapture those previous range highs around 3 cents, so that's roughly 2.5 times from current levels. It's not exactly life-changing wealth, but it's a pretty respectable return for an infrastructure play. Now, the more aggressive scenario, that would mean IoT adoption just takes off way beyond what anyone's projecting right now, with Jasmy positioned as the go-to data management layer for Japanese IoT ecosystems. That could push the token toward 10 cents or even beyond, though. Honestly, that would require everything going right at once. Alternatively, if JANCTION launches to kind of a lukewarm reception, staking adoption disappoints, and partnerships end up more symbolic than actually substantive, well, Jasmy probably keeps trading in that range between 1 and 2 cents, just slowly bleeding enthusiasm until the next big market cycle. The 99% drawdown from all-time highs still haunts the project, and, let's face it, a lot of investors got burned and just won't come back, no matter how good the fundamentals look. That psychological overhang really limits the upside until Jasmy proves itself with consistent execution over, several quarters. So, if you're interested in Jasmy, the approach isn't just buying and hoping for a moonshot. It's about watching for those execution milestones, JANCTION launch metrics, validator network completion, partnership announcements with real KPIs, and, most importantly, staking participation rates. Jasmy doesn't need to replace Ethereum or compete with Solana. It just needs to own that niche intersection of IoT data management and blockchain infrastructure in Japan. That's achievable, defensible, and valuable if it's executed properly. Alright, crypto fam, that's the complete breakdown of Jasmy's second half 2025 catalysts, the validator expansion, JANCTION platform, the partnership pipeline, and whether this penny token deserves your attention. Massive respect to everyone who stuck around till the end. You're building your edge through analysis instead of just following hype, and honestly, that's the only sustainable path in crypto. Before you go, check out my latest analysis on a really interesting topic where I break down something you'll want to see. The community's been dropping some serious insights in the comments and I think you'll find real value there. Drop your thoughts below. Is Jasmy a legitimate infrastructure play, or just another project that talks more than it delivers? I read every comment, and your perspectives always shape future content. Until next time, this is TJ from TJ Crypto World reminding you, partnerships with Sony executives and Panasonic matter way more than Twitter follower counts. Stay sharp, stay focused on fundamentals, and never confuse narratives with execution. Peace.